Okay, I'm actually charged up this morning. Like, I don't know. I'm charged. I don't know if it's because of this GU trade or if it's because I want to come and teach you guys. I don't know. But whatever the case may be, we're here today. We're here. So yeah, guys, welcome back to yet another class. But this time around is a little bit private. This class is not for everybody. So to those of you that joined or that are in this class right now, I want to say a big congrats and welcome. So I don't want to dwell so much on this whole thing. I just want to have a recap and a very quick recap, and then we'll go into we'll start the mentorship already. But for the sake of those joining us, that's why I'm having this recap. So basically, yeah, this was the trade I called. Meanwhile, this was the trade I called. I saw this trade and we can see we're in profits. But that's not the problem right now. So a quick recap. I just want to talk about today, structure and liquidity. Structure and liquidity. Very quick recap. Now, what is structure? Like I always say, structure is basically the direction of the market. Let me go to my let me go to this. Okay. So basically, this is structure. How do they use this? Okay, text 2. Let's see. I'm not going too deep into this. So basically, structure is just the direction of the market. Structure, sorry, this is wrong. Okay. Structure is just the direction of the market. So now we have different types of structure. We have the trending. We have the trending, we have the flat. Now we have the uptrend. We have the downtrend, and we have the ranging. Types of structure, right? Okay. Now we have uptrend, downtrend, and ranging. So let me see if I'll give an example of what it is. So let's just take, for instance, this is an example of okay, of the how do they do this? Okay, let me just use this. Okay. So we have something like this, uptrend. Please, you guys will not mind my drawing. All right. We have downtrend. And we have the ranging market, which is like this. It's just going flat, right? So now we'll leave this one. Now let's focus on this uptrend first. So now a lot of people find themselves counter trading the trend. Now, why is that so? Take for instance, let's say this, we'll call this trend, this uptrend now, we'll call it the weekly. Let's say it's the weekly. Now you find out that on the weekly, you see that the market is bullish. But then if you now come back to the, maybe let's say the daily, it's bearish. Reason because this, let's take for instance, this, let's take this part of this trend. Let's say the market has gone up, come back down. Now it has gone up. Now we're expecting it to still come back down. So let's take this place as an example. We notice that now this is the weekly. Now this circled place, this place I just circled, on the week, on the daily, would be giving us something like this, a downward movement, a downward movement. Now we'll take this as the weekly, right? We'll take this as the weekly. Let me see, let me indicate it here, weekly. We'll take this as the weekly now. So now what now happens is, we've seen that on the weekly, this place is what the, I'm sorry, on the, sorry, the daily. Please pardon me. On the daily, we'll see that the market is bearish simply because it is trying to sweep out liquidity on this point. It is creating something like this. Now it gets even more interesting when you go to the, let's say, 4 hours, and you see on the 4 hours is doing something like this. It has given us, let me take this here. On the 4 hours, it's giving us something like this. On the 4 hours, let's just say it's giving us something like this on the 4 hours. It's, let's say the daily is bearish, 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 bearish. Then you see on the 4 hours, it starts creating another, sorry, let me just, this is, okay. Let me go back here. On the 4 hours, it's giving us bearish, bearish, bearish movement. Then we find out it starts giving us something like this, a bullish movement also. Don't mind my drawing, please. Don't mind my drawing. Okay. So now this, let's just say this is the 4 hour. Now, basic, are you guys understanding me? Are you guys understanding me? Are you with me? If you're with me, just indicate it in the chat box so I'll know I'm carrying everybody along so I don't go too far. Am I too fast? Am I communicating? If I'm communicating, just indicate in the chat box. Okay, perfect. Okay, fine. All right, let's continue. If you have questions, you can keep shooting your questions or you use your mic. That's fine. Oh, perfect. So now on the 4 hours, we'll notice that this market is now giving us both bullish and bearish movement. Simple. What this thing is just doing is creating liquidity. I would always say to my mentees, the market is, wherever you see the market tap into, it is where liquidity is. Two major things that move this market is, or rather what moves this market basically is structure. Is liquidity, because liquidity is money. So wherever money lies, that's where the market will move into. If money is at the top side, liquidity, the market goes into that place to sweep out liquidity and take money. Reason why many of us trading are in this industry is not because of the money, it's not because of the fame, it's basically because of the money. So also the market makers or the big boys, they are also in these markets also because of this money. So they are only trading liquidity. So liquidity moves this market. Now keep going. Let's take it down a little bit. Now we've seen that on the 1 hour, let me erase this thing. So, or rather we can see that on the weekly, the market is giving us a bullish move. So most of you find yourself selling when you should be buying because you've not understood structure. Now, if I ask a lot of you now, do you know structure? You say yes, it is higher low, higher high, which is true. Now on the, I'm coming. Somebody's okay. Please give me a few minutes. A few people are already saying they can't join because of, I don't know. Okay. So now a lot of you find yourself buying when you should be selling. So what do you do in this kind of situation? Now, take for instance, now you see a lot of people, okay, now they say they do something like trend line. Reason why I don't trade trend line is because okay. Reason why I don't trade trend line is because you can see the market do something like this now. I use trend line, but it's not my major strategy. You get. So you might see markets do something like this, tap into this point, and continue buying. Now, this, let me go back to this. Let me go back to this. Can you guys still see my screen? Can you see my screen? If you can see my screen, just let me know, please. Okay. Okay. Yeah, perfect. So how did I catch this trade? You can see that the trade is already moving very well. Now, a lot of people, this is just the, let's say, live example of what happened. Now, a lot of people notice on the higher time frame, which is the weekly. I'm going to the charts right now. We can see that the market is already bullish, like is bearish rather. It has given us something like a head and shoulder pattern, meaning it is bearish. So why am I buying? Structure. Understanding structure, knowing where liquidity lies, and taking advantage of it. So at this point, we've seen the market has given us a head and shoulder pattern. That is one of the confluence, one of the signs that this market, I am correct that it is selling. So why am I buying? I understood structure. Now, we've seen that, okay, retracement and all. We are just catching retracements. We are just catching the retracement here. Now, people saw that, okay, since we are bearish, we'll keep going down, which is not wrong. But then understanding this structure. Now, we've seen that the market was giving us, let me draw the trend line. Let me draw this trend line. For instance, let's say something like this. You see a lot of people at this point, when the market came to this point, they started selling. And I was just laughing. Okay. Now, I wasn't laughing at them because they don't know what they're doing. Everybody with that. I'm not always right, but I'll tell you, majority of the times, I'm always right. Right? So now this market got to this place because I have understood structure that on the lower time frame, I still see liquidity, which is what we are trading, going up to this region to come and either meet. Now, this point is just my POI, this point here. Market might tap into this place and start selling, or market might decide to tap into this place and start selling. But right now, I am just following what I am seeing to grab what I can grab. Right? Why is this thing? Okay. Now, so understanding structure is very, if you understand structure perfectly, you would see you will have more hands or grounds in the market than a lot of people that will be calling sell when the market is actually buying. I don't know if that makes sense to you guys. If you guys, I want you guys to also to actually ask me questions so I would know that I'm carrying everybody along. Throw in your questions. Let me be sure I'm carrying everybody along. You guys, you can throw in your questions. Okay. Do brokers manipulate the market? I would say to some extent, yes. All right. In as much as a lot of people will say they don't manipulate it, but most times, 90% of what we call manipulations, right? It is our fault because we either don't know or don't know where liquidity lies, and the market makers or those guys, those big boys, know where this market is going to move to. So they take advantage of what they've seen, opportunities. So to some extent, yes, there's manipulations. Broker used to manipulate, which is they will increase your spread, slippage. They will give you like increased spread. You open a position at this point, buy at this. Maybe let's take for instance, you open a position at this point, buy here. The market will open at this point, right? And guess what? The market will also want to go down and continue again, like what it did here. At this point, we bought at this point. I told you guys, I'm expecting markets to come and take out liquidity at the downside. We were buying at this point. If you guys remember, we're buying at somewhere here. The market was going up. I said, let us be careful. Market wants to come down and take out liquidity because I just saw that market was going to sweep out liquidity. So that was why it came. It tapped into this, my POI here, and it continued buying. So most brokers will manipulate it and just open your position at this point instead of at this point. Now market will come back down, sweep you out. By then you're tensed. You just close out of FOMO. You close your trade out of FOMO. Most times they expand their spread and they will just take you out of the market, and the market start going in your direction. So that's why we have our recommended broker that we actually, one of them we use. So you can still ask your questions. You can still ask questions. So I would know that I'm carrying everybody along before I continue. Don't feel shy to ask your question. There's no question you ask here that I would look at it as stupid. There's nothing like a stupid question. Feel free to ask the dumbest question if you think your question is dumb. Just feel free, ask your questions, any kind of questions. I want to be sure I'm carrying everybody along, and we'll continue from there. Now, okay, in respect to no question. Okay, question just came in. Okay, sorry, I do not understand how to identify liquidity zone. Okay, to identify liquidity. Now, types of liquidity. I'll just quickly wrap into it. This is a topic for another day, but I'm just going to jump into it a little bit, right? I'm going to just jump into it a little bit. I have my book here that I would have liked to just, I don't know how I'm going to use and share it, but how would I? Okay, probably I'll just have to I'll type it out and send it. I'll just type it out and send it. So everybody is going to, so now types of liquidity, let me quickly just do something about liquidity so you guys will understand. Now, let's say this is an uptrend, still under structure. Let's say this is the higher time frame that I was explaining. Let's say this is the weekly as usual. And let's say this is the weekly. And let's say we want to identify liquidity on this zone. Let's say this particular one here, like this. All right. So on this zone, we notice that we might find out we'll start seeing things like this on the, let's say, the daily. The daily. So now, how to identify liquidity? Let's just say, okay, let me still take it downwards to, let's say, 15 minutes. Perfect. Let me just scale it down to 15 minutes. We'll notice on the 15 minutes, we'll see something like this. Let me say something like this. We'll notice something like this. A low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Right? So we'll notice we'll see something like, let's just say this is the 15 minutes. Let me now put this one here as 15 minutes, this particular one here. Let's say 15 minutes. So what just happened here? We have trend line liquidity, types of liquidity, trend line liquidity. We'll find out that, right? We'll find out that what just happened here, price basically took out this liquidity on this zone. Let me draw this thing again so you guys will understand what I'm saying. What is it? Okay. Let's just say this is a downtrend. Now, what just happened here? Markets just swept out this trend line liquidity. So types of liquidity, we have trend line liquidity, right? Are you guys with me? We have upside liquidity. That's what most of us call, let's say the upside liquidities. For instance, we call those ones, we call it the support and resistance. That's resistance. Now we notice that we've seen here like this trend line liquidity has been taken. This is trend line liquidity. Sorry, it's supposed to be this way. So this is trend line liquidity. Now, resistance at the top, liquidity on the resistance area. Let's take this area now. This particular area, let's say from here like this, let's just take this particular zone. So we'll see something like this. Let's say low. So now what just happened here? This is resistance, liquidity on the resistance area. I would explain how most of these things work. I would explain how most of them work.
So your volume is not coming out. Your volume.
You can't hear me?
That voice.
Please, how many of you can hear me? If you can't hear me, just indicate in the chat box. Let me see. Can you guys hear me? Can you guys hear me?
We can hear you, but it's very low. The voice is low.
Okay, let me check my mic.
The volume.
How about now? Can you hear me now?
We are hearing you small, but the voice, the volume is breaking. It comes and goes. It comes and goes.
Okay. All right. I guess I just have to speak up loud a little bit. I guess you guys can hear me now, yeah?
Yes, sir. We can hear you.
Okay, perfect, perfect. So now I was saying we have trend line liquidity, and now we have the resistance liquidity. That's this one, what we're seeing here at this point now.
I think you should position your mic very well. Maybe it is coming from your mic. It comes and go. It is breaking.
Even up to now. Even up to now. Even up to now.
Okay. Can I hear you now?
All right, all right. So as I was saying, we have. Okay, perfect, perfect, perfect. Let's go on. So we have the upside liquidity. Upside liquidity. Now, we find out most times in this kind of situation, we find out that most times the market does something like this. You've been trading, at some point you were selling, and maybe at this point you see the market just tap into this point, sweep out your liquidity and continue. So market just simply took out your liquidity at the top, because let's say at this point, what just happened here at this point, an example here, this is a live chart currently, it's a live chart. So we saw that the market, what happened here, it swept this equal high at this point. Can you guys hear me? So the market swept out this liquidity at this up.
I think you position your mic very well. It is breaking. It comes and go. It comes and go.
Okay, most people are saying they're hearing me clearly, actually. I really don't know. Let me see if it's from my own end. Everything here is showing perfectly fine. Okay. Ish. So, okay, perfect. People are saying they're hearing me. So we see that we saw that the market just took out liquidity at this point and started selling. Basically, the market just took out liquidity on this zone. Liquidity is what drives this market. Now, if you look at it on this other end, you see most people plotted their trend line. And what happened? At this point also, the market swept out trend line liquidity. Trend line liquidity has been taken out. Upside liquidity has been taken out. Now, what do we have left here? We have downside liquidity still remaining, right? So those are the types of liquidity we have on these zones. Those are the types of liquidity rather we have in the market, these types of liquidity. Let me take a screenshot so would, okay. But did you guys understand what I was saying? Did you guys send, if you have questions, just still send in your questions so I'll know I'm carrying everybody along actually. Wow, I didn't even know it's up to an hour already. Wow.
Yes, sir. I have a question, sir.
All right. Shoot your question. Let's just see. Let's see if we would use about 5 to 10 minutes to answer questions. Maybe.
As you said, we are going to discuss about liquidity later. But
yes.
For now, what you thought, I have a little bit confusion about it.
Okay. Ask your question.
Yes, it's about the liquidity. I did not understand.
Okay, is it the types of liquidity?
Yes, the types.
We have trend line.
I wanted to take it down as I wanted to write it, but before you have already go.
Okay. No, okay. I'm going to still go back into this liquidity in our next class, but we have three types we have several types of liquidity, but the major ones are trend line liquidity. Can you hear me?
Okay. Yes, sir.
Upside liquidity, downside liquidity.
Okay.
So the upside liquidity is something like this. You see the market doing something like this. It sweeps out the upside liquidity and continues selling. That's why you people will not hear some people saying the market, they manipulated the market. No, we just didn't see that liquidity resting above. So imagine you're putting your stop loss at this point. So all the people taking their stop loss, putting their stop loss at this point, what the market just did at this point was it just took out their stop loss and sold, coming back to this point, took out these people's buying at this point, took out their liquidity at this point, and continued. So it is important to know where you're putting your stop loss and where the liquidity lies, so you'll be on the safe side at all times. I don't know if that makes sense.
Yes, I understand you.
Okay, perfect, perfect. Which other do we have any other question? It's already 1 hour we've been here.
Okay, from my understanding of what this liquidity is, I think I can say it's more of a breakout of the previous this thing that you like, that trend line, the last high that touched that line. Now, when it breaks, your expectation is to reach that point and start coming down as usual. But this time around, it fails. Then it becomes the trend line, the liquidity. I don't know if I'm correct.
I'm trying to understand you. Most times, yeah, liquidity, the market most times we sweep out your liquidity and start going in that direction you want. Let's say an upside. For instance, if I called this trade in the morning on the free channel, on the general public, on the public channel rather. I called this trade, I said it's a buy. Now, does it mean I'm wrong? No, but if we had stayed in the market till that time, most of us might close very early, right? Most of us might close very early because the market will be tensed, saying the market might hit our stop loss. Now, the market will go into this point and continue buying. You get? So, understanding this structure first, then understanding where liquidity lies, because structure opens your eyes to see where liquidity lies. I don't know if you get me. Are you understanding me? Are you understanding me?
Yes.
Okay, perfect, perfect. All right, perfect. So any other question? Because it's already 1 hour already, so I just want to take in more questions. So we don't stay too long on this thing, and we'll have to go and do other things. So any other question? If you guys have questions, you throw in your questions. So we'll just let's shoot our questions. Any further questions? Any further questions?
Hello, my question is,
Yes, sir.
I had to use this more of these drawings, all these drawing signals here. I don't understand it, and I don't know how to use it.
This one?
I know. No, there is one line there. Maybe is it
this one or this one?
No. Yeah, that one.
Okay,
and there is one line too.
Yeah, this is basically
that one is support, ba?
Yeah, this is like sell side liquidity. That's what it means. Sell side liquidity, types of liquidity. This is the sell side liquidity. That's where liquidity lies at the support.
Okay.
So I said support, liquidity at the support, liquidity at the resistance, upside liquidity,
Okay.
downside liquidity, then trend line liquidity. Trend line liquidity is the one you see like this.
Okay.
Support liquidity is the one you see like this below.
Okay.
Resistance liquidity is the one you see above. That's where this one is like this. And the market took it out. Those are the three major types of liquidity.
So in this situation, which way the market intend to go? If
we're buying, it's going up. We're going to sweep out the liquidity above first. That is what I'm doing. That's the signal I called on the general public channel. We can see that the market is going up, it's sweeping out. Now, my plan is to see the market sweep out this liquidity. I want to see price sweep out this trend line liquidity. That is why I'm buying. You get? It is just understand structure and know where liquidity lies. Structure shows you where liquidity lies. I don't know if you get. This is not me saying trade this one, trade that one. Trading should be made very simple and easy. No much complication. If you complicate your trading, you might not make a lot of profit.
Okay. So
that's just it.
So the market, it will always sweep up the liquidity before sweeping down the down liquidity.
No, not always. It's if you understand now, depending on the market structure, depending on the direction of the market, right? And now, wherever you need to train your eyes to always know and see where liquidity lies.
Okay.
So take for instance, you're driving. Because you say anytime you're driving around on an express, you must drive from 120. No, it is what the market is giving to you. You use it.
Okay.
So if the market is saying, let's say we're in a downtrend and the market is having liquidity at the up, tendencies are the market will sweep out the liquidity above because that's where liquidity is, where money is. So the market is wherever the market, the place you see the market tap into first is where liquidity lies. And at this point, we're seeing liquidity at the upside. But overall, on GBP USD, we are bearish. I don't know if you understood me.
Okay. Now, another question. How can someone identify the area of liquidity?
Structure. Know the direction of the market.
Okay. If the market is going downtrend now, the liquidity should be downtrend or the liquidity should be uptrend?
It is okay. Like now, this market is downtrend. It is a downtrend.
Okay.
But I'm buying liquidity. I'm buying to sweep out liquidity because I'm saying that there are a lot of sellers. Now, take for instance, you want to sell bulb. You will not go and be selling bulb in a market where they're selling tomato. Only if they have a lot of